Hello friends, hello professionals, and welcome back to my channel, The Sea of Regulation. Simone here, and I'm back with a video touching on outsourcing. What you should and should not be doing. Now, this is an area that regulators cringe at sometimes, and it can be painful if you get it wrong. But before I jump into this video, let me get my usual disclaimers out of the way. I'm a financial services regulator. I'm not a lawyer, and I'm not a professional advisor. And the views on this channel are definitely all my own. And they do not represent the views of any regulatory authority or international standard setting body. Now with that out of the way, let's dive in. Outsourcing. So you're a firm and you're trying to leverage economies of scale from someone else that can do something for your business that you think would be better handled outside of the firm. And if you're a regulated business, there's certain things that you have to be minded about before you outsource. There are some people who think that, listen, this person is good at X, I am going to outsource it, and I am just going to make sure that I have more space to focus on getting in clients and making money. And I can save some money by outsourcing this particular function to that firm, and they would take care of it for me. Now, on the face of it, we get it. Regulators do get the fact that outsourcing can have its benefits. But in relation to your business, outsourcing in of itself presents some risks. And so I'm going to go over a few of the do's and don'ts that you need to consider. So one of the do's, make sure you do engage the board of directors for approval. Remember that they're responsible for oversight. They need to weigh in on whether an outsourcing should take place in relation to a particular function. Because at the end of the day, this is going to impact their firm, their strategic oversight, and they should definitely have a decision on it and it be documented. If you are a senior manager, it is not for you to take it upon yourself to take the decision to outsource X to this company. That's just not the way to do it. One of the other do's, make sure you carry out a risk assessment in relation to the firm or firms that you're looking at outsourcing a particular activity to. Now, risk assessment tends to touch on a lot of things, but when it comes to outsourcing, we regulators see that in a lot of cases, firms may not be doing any sort of checks on the firms that they're looking to entrust with a part of their business. And I mean, like, if you have a kid, are you going to just leave your child with a random stranger? Probably not. You're going to do your background check before you hire someone to babysit your pride and joy for you if you have to go out of town for a couple of days or, if family members are not available. The same thing applies to a company. If you are going to outsource a part of your firm's strategic operations, and sometimes we think like lesser tasks are not strategic. Trust me, everything is strategic. You have to do your due diligence on that firm. What's the background of these people? How long have they been engaged in this particular activity? Do they have any requirements of their own to be regulated? Do they have a trade license? Do they have a track record? Do they have testimonials? Do they have a current lawsuit that might wipe them out and take them off of the face of the business planet in the very near future? There are things that you should be checking in relation to a firm or a number of firms. You might be having a pageant, so people are going by to make sure that they can provide that particular service to you. And you want to make sure that they're in a position to do what they can do effectively, competently, but that they have the right background for your firm and they do not present an undue risk. Now, you've assessed them, board has approved, you've done the background checks, but what happens if it's a really good firm and everyone wants a piece of them? They might not have enough capacity to deal with you. So it may be that things slow down. So don't just stop at board approval and risk assessment and think, great, this is great, let's just go. Because the turnaround time for that service that you need may slow to glacial speeds, and it may not be suitable for your business. So you have to assess that as well. That's one of the things that you just shouldn't do. Just don't rush in. And don't start an engagement without a ratified agreement. So that agreement, you need to have some back and forth looking at exactly what is going to be provided and what the firm is going to do in relation to whatever it is you're outsourcing, and what contingencies do they have in place. Do they have backup plans just in case something goes off the rails? Sometimes we don't look that deeply. And I'm going to touch on BCPs a little later down. But make sure you have an agreement. Make sure the agreement is robust. Perhaps have the board of directors sign that agreement. Remember, they're responsible for the compliance function, but they're also responsible for strategic oversight and the decisions that direct the firm to where they're going. So you definitely need an agreement, a strong agreement. You know, for a lot of functions, a one-page agreement will not do it. Regulators are not impressed with one-page agreements, especially for outsourcing. So that is one of the areas that you need to look to. Another area that you need to consider, and let me flesh this out, beyond capacity, what is their contingency? And when I say contingency, their business contingency plans. What do they do if they're located in a different jurisdiction where you have floods, fires, earthquakes, hurricanes, or, you know, like what's happening around the world right now? What are their contingency plans to be able to get back into operations should the worst happen? How are they maintaining their data? And is their data secured? Because if you're outsourcing, there's information that's flowing between you and that particular outsourcing partner that you need to make sure that they have controls in place. Or else you could be subject to a hack. Some of your important data get out there, and what does that do for your reputation? I know your clients won't be impressed, and regulators will be even less impressed. So you need to make sure that you are very firm and secure with what they have in place for confidentiality, for their business continuity planning, and for cybersecurity. So make sure you do check on all of those areas before you get into an outsourcing arrangement. And if you're already in and you know these things are maybe throwing up some flags for you to go back and check, because sometimes we rush in, sometimes we make mistakes, we're human. You can go back and check the terms of and the conditions of an agreement to make sure that it reflects all that you need for that particular firm. So you've outsourced. Once you've outsourced whatever it is, don't just sit back, relax, and think to yourself, I don't have that to worry about. You actually have to monitor that. Regulators want to see that you're actually checking in on whomever is outsourcing that particular function, and making sure that the outsourced firm is carrying out the duties. It's never pleasant to have a rude awakening to something going catastrophically wrong and the firm not tell you about it. You remember that agreement I spoke about you needing to sign? Well, what are the requirements to disclose certain things if things do go wrong? You need to make sure you have something built in, and it helps you in terms of liability and to make sure that there are controls in place in relation to that outsourced function. Now, moving on a bit, some people feel more comfortable outsourcing within a group. So you're within a group of companies. So you're company A in jurisdiction X and company A in jurisdiction Y has capacity to do a certain thing for you. If you're a regulated firm, we don't really see that as being different. And if you thought I was going to say we don't see it as being a problem, you were wrong. We sometimes see more problems with outsourcing within groups than if you outsource to a third party. Why? Because you're less trusting of the third party, you'll do more due diligence on the third party, you'll check on the third party even more often, and there may be a group compliance culture that is impacting your ability to really review an outsourcing arrangement. So within a group, you might have the agreements, the directors may be all on board, but there may be something that is systemically wrong within that firm that doesn't give you the best result. And if that is the case, sometimes the best thing is to document it, because I understand that there could be pressures on you to approve certain things, but the regulators do come in and check, and at times we're definitely not happy with what we see with intra-group outsourcing arrangements. It's one of the areas that you should definitely be minded about. Now, the last thing I'll touch on harkens back to my past life as an auditor. You've outsourced something, whether it's within the group or with a third party, you should audit it. Check to see that things are going as they should. Do not wait for an unpleasant surprise. You want to make sure that things are being done in the manner that you expect them to be done. And guess what? In some jurisdictions, the regulator requires you to audit your outsourced agreements to make sure that things are not falling off. And when it comes to certain parts of client engagement, if you've outsourced a particular component that would impact AML CFT, definitely audit it. Audit it more than once a year. That might be your best take. That's just my personal opinion, not giving you advice in terms of what exactly to do. But again, remember, you have to risk assess the person that you're outsourcing to or the firm. You also have to risk assess the risk of regulatory failure if something were to go wrong with that outsourcing agreement. So you want to consider timing your audits according to the risks that are presented with that outsourcing agreement. If you found this video helpful, definitely give it a thumbs up. It helps with the algorithm. And if it has given you some things to think about in outsourcing and you want to drop a comment below, because there are more things that I can definitely say on this. Drop it in the comments below if you want me to expand a bit on any one of the components for outsourcing, because it is one of the areas that regulators do drill down on when we are reviewing our licensees. But help the YouTube algorithm, hit the notification bell so that you get my videos when they do drop, share with your friends, and definitely come back for more videos. I will be keeping the momentum up, and hopefully I'm helping someone through these videos. And I'll definitely catch you on the next one.